Hello, this is Kevin Kimball and welcome to Module 2. I'm just going to talk you through this module worksheet, hopefully make sure you are on track. Now some of the stuff you should be able to totally pick up from the video, so I'm not going to spend any time on it. That's what the case is for this first item. You should be able to just watch the videos in this module and you should be able to answer number 1. And these are just your opinion, right? Give your opinion on how important these are to you. So really, whatever you put here is totally fine, and that is up to you. Number 2, this is something that you may not be able to do because you may not have other people to consult with, but you could post something on our discussion board for Module 2 and discuss it there if you like. Otherwise, just do the best from what you know of these 4 different business ownership types. Number 3, this is based on the video, and it simply goes through all the different criteria or the specifications of each ownership type, and you should be able to complete this based on the videos. Number 4, this one, this is just kind of what you may know. So some people who are maybe a little more familiar with business, this may be easier. Others may be a little more difficult. Just do your best, and you can compare the answers. And it just gives you a feel for these different business types, these not business types, but ownership types. Number 5, do your best here. Once again, it's based on the videos. Okay, now number 6, this is a little bit of a new thing that wasn't necessarily on the videos. I kind of introduced it, but I'm going to take a little more time to introduce this concept. Okay, so what I have here is I have the balance sheet equation. Assets equals liabilities plus equity. And then I create these, what I call T accounts, what accountants would call T accounts, of the different items that are assets, the different items that are liabilities, the different items that are equity. And I really should put these pluses in here. Right, let me mark this up here. I'm going to put in a color. Okay, I'm going to put in a plus there, a plus there. Okay, so what this means is if you record something on the left here, it means you have more cash. If you put it on the right, it means you have less. In liabilities, if you put it on the right, it means you have more liabilities, and if you put it on the left, you have less. So what I'm asking you to do is, one by one, I want you to read the transaction and ask yourself, which of these accounts do you think that transaction has a direct impact on? Okay? So, like I said, under assets, I'm going to show that we have cash, inventory, and accounts receivable, which are amounts people owe you for having made sales to them. Under liabilities, it's accounts payable. These are amounts you owe suppliers that you purchased from and haven't paid for yet. And notes payable, these are loans that you've taken out and haven't paid back. Under equity, we have the contributed capital, and then retained earnings are amounts that are earned and retained in the business. And down below, it kind of describes where those retained earnings came from. You have your net income, which increases retained earnings, minus the dividends, which reduce retained earnings. And net income comes from your revenues minus your expenses. Okay, so let's just do an example so you get the idea. So Kong and Sukasa created a corporation, KT Corporation, had the following first-year transactions. They each contribute $100, okay? And they received 10 shares of no par common stock. These are just the certificates that show it's not really a dollar amount here. So we're effectively saying 2 at $100 each. So what that means is we have $200 more cash. So this is number 1, if you want to note it that way. And they have capital stock. That's number 1. Okay, so that's what you do. Cash went up 200, capital stock went up 200, and it stays in balance. Total assets are 200, equity is 200. Okay? Then think about this next one. You borrowed $500 from Liability Bank. What would that do to cash or other assets? What would that do to your liabilities? What would it do to your equity? It won't affect all these accounts. Just try to think it through and put it on the correct side. Pluses are indicated and minuses are indicated, and that's what you do. And just work it through, and the answers are already posted, and you can learn this stuff. So I hope that short introduction helps you. Okay, moving on down. I better pull this over a little bit here. Just one second. So then, once you've gone and updated all this information up here, all your assets, you can add up all the assets and get total assets. Add up all your liabilities, get total liabilities. Add up all your equity and get total equity. And that will allow you to fill in this balance sheet equation, which needs to balance if you've done it correctly. And you can say, how much income before taxes did they earn? Well, you can go up here and you can say, well, we have revenues minus these expenses, and that would tell you how much income they earned before taxes. And then we say, if their tax rate is 20%, how much income tax should this corporation pay? Well, that would be 20% of whatever this number was in B. And then if they have a personal tax rate of 30%, how much in tax will they owe on the dividends they receive? So up here, they paid dividends of $30. Dividends of $30 were paid out to the owners, and you can then compute the tax rate on those dividends that were paid out, and that'll tell you how much taxes were paid out. If KT had originally been set up as a partnership, how much in income tax would have been paid out at the company level? None would have been paid there, and I guess I've already given you the answer, because you're not taxed at the company level. And then you'd have to say, well, how much is taxed at the owner level? And that would be based on the net income. Okay, so I hope that was a good quick review. I hope that gives you a fighting chance to get this. But once again, the solution's already posted and ready for you to go. Aloha.